every US investor I speak to, they can't believe how antiquated the UK market is. So yeah, it's like we've just discovered the internet, to be honest.
If there is a better investment than Bitcoin that comes up in the future, then we'd have to consider it. But from where we're sitting, I can't see where or how that's going to happen. Show me a better investment, and then we'll think about whether we sell our Bitcoin. But until such a time, it stays where it is.
You should have a long-term time frame, but now everyone's got a very short-term time frame. All season in crypto has been completely cancelled.
It is a race to get as much as you can. You're home with the Bitcoin that you've got, and there's only going to be a limited amount. So wherever you're operating in the world, you're still playing with the same Bitcoin. The unique thing about Bitcoin is it wasn't launched by a big multinational corporation onto the world. It was a grassroots thing. The institutions were, by definition, late into the game. And now it's not, people can see it's not going away. The institutions have to be interested in it.
You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money?
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up.
Hey, Internet, welcome back to another episode of New Foundations, the podcast brought to you by Acropolis, the Bitcoin Treasury company. As always, I'm in the studio with my co-host, co-founder, and CEO of Acropolis, Chase Palmieri. And this week we have two guests. We are joined by James Van Straten. He's an advisory board member at Coinsilium and senior analyst at CoinDesk, as well as Malcolm Palle. He's the chairman and co-founder of Coinsilium. So both of you, very excited to have you on the show and get into the weeds of what's going on in the UK in regards to Bitcoin adoption and the public markets. So welcome to the show, gentlemen.
Thank you very much for having us, Basin and Chase.
Thank you for having us.
Yeah, so I'll go ahead and kick things off with the first question. And, with both of you on here, either one of you can feel free to jump in and take it or even kind of add on to whoever's previous answer. So we'll just kind of take it as we go. But I understand that Coinsilium and Forza are kind of this combined or merged entity in the UK market. So I want to get into kind of the structure to lay the groundwork there. But I also understand that you all recently announced this week another 6 Bitcoin added to the Bitcoin Treasury for a total of just over 25 Bitcoin. So congratulations. But just to lay the groundwork here, give us kind of the current state of this Coinsilium and Forza structure.
Yeah. So we kind of did everything with the regulatory landscape as a guiding light. Because the difference between the UK and a lot of other jurisdictions is you simply can't set up a company that is a vehicle to hold cryptocurrencies of any denomination. And if they're perceived as being kind of a proxy for Bitcoin, so in other words, every metric that people use in this space to value a company, a treasury company, that would cause some conflicts with current UK regulation. So we knew from a structural point of view, Coinsilium was in a unique place because Coinsilium's been listed for 10 years and it's been in the digital asset space for all that time, but it's had equity investments, it's got token investments, it does advisory work. So we were kind of guided by this concern that we didn't want to be perceived as being an unregulated ETN or ETF or anything that the regulator could look at us as being, and we didn't want to kind of be an imposter of what we're doing. So what we decided to do, Coinsilium operationally is based in Gibraltar, and Gibraltar is quite a experienced crypto friendly jurisdiction. It has a regulatory framework. So we set up 100% subsidiary of Coinsilium and we called it Forza. It was actually a company that we already owned and we just renamed it. And we took advice as to how that company could become a treasury company and what it needs to do to be compliant in Gibraltar. Then we took advice in the UK as to whether or not we wanted to be sure that by setting up this 100% owned subsidiary as the vehicle that manages Coinsilium's Bitcoin treasury, it's not going to conflict with any of the regulations in the UK or in Gibraltar. So it was really about sort of giving us a way to navigate this very kind of early stage regulatory landscape in the UK without causing us any problems. What was helpful is that we've already been in the digital asset space for 10 years. So it wasn't like we had a sandwich shop and then we decided to, buy some Bitcoin. We were already involved in this space. We already navigated a lot of the challenges and hurdles, the banking issues, all the things that I'm sure you're very well aware of that have caused us a lot of concern. The things that, if it doesn't kill you, makes you stronger. And we've done all that for the last 10 years. So we elected to use this structure. And the benefit of it is that obviously it's a discrete vehicle for owning the Bitcoin that Coinsilium wants to use in its treasury. And the other advantage with it is that because Coinsilium owns it 100%, it kind of gives us optionality going forward of what we do with Forza, depending on how the regulatory landscape evolves in the UK particularly. And we expect it to become more friendly because I don't think anyone's got a choice. This stuff isn't going away. But a lot of shareholders often ask, well, what happens to, I own shares in Coinsilium. Coinsilium owns Forza. If anything else happens with Forza, what happens to my shareholding? And it's kind of it's a bit of a moot point because ultimately, as long as Coinsilium owns Forza, all the interests flow through to the topco, to Coinsilium Group. And if anything changes with Forza, only the shareholders will benefit. So, it could be that in a different type of regulatory environment, Forza gets listed in its own right. I'm not saying that's going to happen anytime soon, but if it does, it's not going to be without a significant payday, and maybe the Coinsilium shareholders will retain an interest in Forza. So there's optionality there, which we don't. It's probably too early to discuss, but we set it up with that in mind. I hope, probably a convoluted answer, but I hope that it gives a bit of clarity around it.
Yeah, and I just want to add, Coinsilium approached me and we made myself an advisor in January of this year. So it was a very well thought out process, a lot of discussions, obviously navigating regulation. So it's a really well thought out process for over a couple of months, probably longer, that we've decided to do this kind of strategy. And now we're seeing in the UK lots and lots of companies kind of jumping on the bandwagon, kind of as a Hail Mary, no thought process, or just trying to increase their share volume or volatility within their share price like we're seeing in the US. So it's important to be able to differentiate between other companies that are just trying to jump on the bandwagon as a Bitcoin effect, essentially.
So before there were publicly traded Bitcoin Treasury equities in the UK, how did UK retail investors get Bitcoin exposure?
Well, you could buy in 2020 and slightly prior to 2020, you could buy an ETF or an ETN that was, I can't remember which one it was. I think it was a CoinShares product. And then the FCA banned all products related to Bitcoin and crypto ETNs or ETPs. And then that kind of coincided with the MicroStrategy premium going into 2021. And we look at like Hargreaves Lansdowne, which is the biggest UK brokerage account, and you could see on the most purchased stocks weekly that MicroStrategy was that stock in the top 10, top 5, top 3, top 1. It just kept being bid up. And that was the real, other than buying spot Bitcoin on Coinbase, as a retail investor, that was the only kind of access you could get to a Bitcoin exposure. Obviously now we're seeing a load more treasury companies, but even with treasury companies such as like Metaplanet, for example, we still can't buy it. MSTY or these other Bitcoin dividend products, we actually have to phone up the brokerage platform to be like, hi, can you please list the stock or the ticker? And it takes a lot of people and a lot of time. And MSTY has been going for about 18 months, and it's just been listed on the largest UK brokerage account. So you can imagine how hard it is for investors to get Bitcoin exposure.
I think the regulator in the UK has dragged their feet. I think it's fair to say, and you know, some who are less forgiving would say they've been you know, creating obstacles. But the fact of the matter is that we've let other jurisdictions grab a lead, and now with the success of we don't call them Bitcoin treasury companies as such. We call them companies with Bitcoin treasuries. I mean that just gives us a little bit of leeway, but even so, it's just semantics really, because everyone knows what's going on here. But that's something that the regulator can't ignore. It's not like they've sort of come to the market and then, you know, just played around. They've gone phenomenally, and we are sort of in that pathway, particularly of the Smarter Web company, which has, you know, took most of the risk there. So I think that it's now too big and too obvious that it's what retail investors want, that there's no longer an argument to say that buying Bitcoin is dangerous. It's, you know, they can, everyone has to have their risk disclaimers, but ultimately, you know, we can't be in a position where we've got this, you know, nanny state, we call it, where they decide what retail investors can do and can't do. Everyone opening a brokerage account, whatever complexion of equities they're buying in, signs a huge disclaimer and acknowledges they're taking risks, and they acknowledge the value of their investments can go down as well as up. So, you know, it's no different. It's just about normalizing it, and I think that's a process we're working through. But unfortunately, in that, over the course of this process, crypto in the UK has got a lot of catching up to do, and hopefully, you know, with what we're doing, we I think coming out of the traps and taking a bit of a chance, we're in a very good position to sort of show the light.
Yeah, and it stands to reason that a vehicle like this, you said a company with a Bitcoin treasury, that it becomes marginally more attractive to investors in a jurisdiction where there's limited access to other forms of Bitcoin exposure, and that's kind of the upside potential there, and that those jurisdictions actually make sense for targeted plays like this, for, you know, the launch of a public market Bitcoin equity. I guess you also mentioned Metaplanet there. I'm curious, obviously, marginally, the more restrictive Bitcoin exposure is, the better for the Bitcoin equity. It would stand to reason. But what Metaplanet seems to be benefiting from is also this secondary tailwind, which is that the local currency, the Japanese currency, is rapidly debasing. Whereas on the other hand, the British pound is one of the strongest currencies in the global markets. And actually, as James mentioned on the podcast with Tim Kotzman recently, one of the only, you know, trading pairs that has not yet reached 100,000 per coin. So I'm curious, would you consider the strength of the British pound a headwind?
No, not really. I think it's all relative. In 2008, the pound was 2-1 against the dollar. It's now 135. We're holding rates at 4 and a bit percent. The UK economy is teetering on a recession. We're at 3-year high unemployment. Our gilt market has got no bid essentially, so the long end of the curve, no one's buying. So I do believe the pound is being artificially held just from a weaker dollar at the moment. So yeah, this is the bull case for Bitcoin. It's held 100,000 for 40 days straight. And once we inevitably get the interest rate cuts, as global liquidity rises in tandem, it is just a matter of time, to be honest. I don't really see any headwinds.
I don't think anyone in the UK considers the pound as being particularly strong. I think it's just because everything else is so weak. It's like the best house in a bad neighborhood, you know, for the moment. And I don't think you know, we're kind of concerned. Our economy is very precarious at the moment, so don't see it as a headwind as such. But maybe a lot of that is because of the the effect that we're feeling in the market for the demand for stocks like ours, simply because of lack of availability of others. I think maybe if the markets were swamped with fit for purpose propositions, then maybe it'll be a little bit different. But it's very hard for someone to set up a treasury company that is actually fit for purpose and compliant. I heard from a broker today that someone decided they were going to, a listed company that was kind of a bit of a zombie, decided they're going to buy some Bitcoin and announce it. And they were told to go away and get a policy and do all the things that need to be done to be fit for purpose. And they came back within 2 days and said it's all sorted. It was, of course, scratched beneath the surface. It's not. They might be buying it on their, Revolut account, which is, one of the most popular ways for people, retail, to buy crypto in the UK. So it is the pound, I think, in isolation it's probably not good to look at it in isolation. It's probably better to look at it against the dynamic that we have here, which is quite unique.
Yeah, I could also show you a trading chart where I have every 8 years the pound really falls, and we're approaching that 8 year period again. So I have parity with the dollar within the next 5-10 years, probably sooner. So yeah, we were at with the Liz Truss fiasco, we were just above parity. It's only because we were so strong for so long against the dollar. But trust me, as a British citizen, we definitely don't consider it strong. As Malcolm said, if you're comparing it to many other currencies, it's just who can debase their currency the quickest. I think UK as well, before this Labour government, it was a very safe place to be, very apolitical. It's a safe haven for very wealthy investors, or it was, so that would give it some premium to it. But yeah, lo and behold, it's not a strong currency.
Embrace the future of corporate finance with Acropolis, your strategic partner for a Bitcoin treasury strategy. We're the experts your business needs. Acropolis offers trusted Bitcoin advisory. We provide you with an outsourced Bitcoin strategy officer, world-class research, an accretive financing team, and more, so you can navigate Bitcoin's market with confidence and acumen. Best-in-class custody with multi-institution custody. Eliminate the risk of loss while maintaining full control of real Bitcoin. Acropolis exclusively uses multi-institution custody as the safest and easiest way for businesses to hold Bitcoin. Bitcoin-only solutions. The Acropolis platform is designed for businesses of all sizes to seamlessly manage their Bitcoin treasury, and we focus solely on Bitcoin to offer you the most specialized services available. Adding Bitcoin to your balance sheet is just the beginning. With Acropolis, you're not just adopting Bitcoin, you're mastering its strategic use to create and maintain value for generations. Take the first step and start your corporate Bitcoin journey with Acropolis. Book your free consultation today at acropolistreasury.com/book and start implementing our proven strategies within days. What's unique about your strategy in the UK that differentiates y'all from, say, the Smarter Web company or any other startup that might follow suit in that market?
I think it's down to the what I've mentioned and touched on before is our 10 years experience. Everything that we do emanates, all the differentiation emanates from that. Because firstly, when we talk to institutional investors and brokers and all the people we need to be communicating with on an ongoing basis, that's our starting point. It's that, the retail market has come along and is, we're very grateful for the attention and the support. But ultimately, the retail market that is interested in this particular model is new-ish in the crypto universe. Digital assets have been going for a long time. Everyone who's been in digital assets for as long as we have has always recognized Bitcoin as the reserve currency of cryptocurrencies, and all other cryptocurrencies always flow into Bitcoin. But the guys that are coming along at the moment have seen the light, and that's all they want to see, and rightly so, because you can't go wrong. Provided you have faith and you believe in the in Bitcoin as being the characteristics of it, which we all invest in. So what we do, we draw from our technical experience, our understanding of the best practices for a public company, and also the the things that aren't that important to a lot of investors at the moment. But for us, they're second nature. If you've been in crypto since 2013 or 12, you've been hacked. You've seen how hacks work. You've seen how scams and rug pulls work, and you know all the tricks that people play, and you know about how you need to go about your business to ensure that you're performing to best practices. And that is exactly what institutional investors that we talk to are looking for. I'm the chairman. We have a non-exec director who's also legal counsel. We have a CFO. Eddie Travi is our CEO, who has been in the space for so long. He knows pretty much everyone. So we have all that experience. And I would say that everything we do, and even the way we thought through our strategy with Forza, came from that understanding of regulation and of compliance and of the economics as well of actually doing things right in commercials. So there's a lot of things that differentiate us, but it comes down to experience and exposure in the industry.
And for me as well, because I wasn't part of Coinsilium 6 months ago prior, it's also that like there were a number of public companies in the UK considering doing a strategy, and it's like, who do I want to be associated with? And it's Malcolm could tell you his extensive history of all the industries that he's been associated with, the multiple cycles, not just in crypto but in gold. So it's the experience that not many people have within both TradFi and digital assets, which gave me the comfort. Coinsilium's gone through 3 bear markets, and the only real treasury company is MicroStrategy that's gone through 1 bear market, which is why I always hold in my opinion, a premium to 1x MNAV minimum. So most of these treasury companies haven't even been here for a full cycle. So it's being able to look. Everyone's a genius in a bull market, but how many of you are still going in a bear market? And it's managing, like we've always said, managing downside risk. So yeah, it's not just about the contacts or the money you can pull in. It's the experience, the know-how, and being able to navigate in up markets and down markets as well.
Yeah, and in regards to the Bitcoin Treasury strategy, and maybe James, this one's for you. We've seen the rise of what strategy, previously MicroStrategy, is doing in the fixed income market. Is there any interest in fixed income products?
Yeah, I'll start this and then you can add to it because you come from a more macro dimension. But in the UK, part of the what goes with the landscape is the limited options that you have. There is no ATM mechanism in the UK. And so what you have to do is you have 2 distinct mechanisms that we can use at this stage in our evolution. And one is to go through the broker network. So these are what are effectively placings, which brokers can ask their clients, offer their clients who are usually sophisticated investors, qualifying investors, to participate in a placing, which raises money for us by placing shares. This happens over a short period of time off market, and and then it's announced to the market when the placing is done and complete. And so everyone is inside during that process, and it usually takes maybe between 1 and 3 days to conclude. There is also another mechanism which we quite like, which involves retail investors being able to invest, because there's a carve out in the European regulations, which although we're no longer part of Europe, we still have as a legacy kind of regulatory structure, which allows for companies to raise up to 8 million euros in any year from retail investors through a financial promotion without having to produce a prospectus. So we've been using this mechanism as well and this has been very effective because retail investors are the ones who understand our business far more often than qualified investors. They just like, those qualified high net worths or funds will look at the price and pretty much that's it. And if they like the idea that it's going to go up, they'll put some money in. But retail investors through the retail platforms can also get involved, and those are we've used those and we're using those currently, although they're only for UK investors, I would say. So there's no ATM mechanism, and also whilst kind of debt is something that we would explore at the right time, it's not something that convertibles, the market's not ready for it. The mechanisms aren't there at the moment, but I do believe that as this starts building in the UK, these new mechanisms and these new instruments will start. I say they're new, they're not new in your part of the world, but in our part of the world, they will come into play. And so we're at the very beginning of this, and it's a little bit like, any industry when it starts, you're restricted. Remember with dial up, once you've got broadband, you realize that this whole world opens up for you. So right now we're at the dial up stage of funding companies with Bitcoin treasuries. And once we get past the dial up stage where these new mechanisms plug in, because there's capital there, and there's the skill sets to structure this capital into ways that can interact. And I'm sure that will start happening, and we'll start looking at other ways of doing things. I don't know how long it will take, but I think with the amount of money, the attention that this industry is getting, I think it could happen sooner rather than later.
No, I agree. I think it's so hard for US and every US investor or retail person I speak to, they can't believe how antiquated the UK market is. So yeah, it's like we've just discovered the internet, to be honest. Or I think the best analogy is the UK market is where the US was in August 2020 when Michael Saylor launched his Bitcoin treasury. And if you look at his journey, he actually only found out about the ATM probably 18 months ago, maybe. I think I remember there was a podcast with him going, you're telling me that there is an ATM mechanism. So it's not like we've all known about an ATM for 5, 10, 15 years, and only Saylor came about it about 18 months ago. So yeah, we're about the UK is where the US was in August 2020, and it's yeah, it's just doing the programs that we have available for the investors. Remember, I think the UK investor doesn't have the same appetite as US investors. The UK investor is very much, in Europe, they buy property and sit on a lot of cash. We don't trade stocks. The FTSE 100 is effectively 15% up since 2008, so it's down on a real terms basis. So UK and the US are completely different. There are loads of IPOs or cross listings that UK were going to have. They're all moving to the US because of the lack of liquidity. So with our Rachel Reeves, who is who was meant to be our savior,
She's our chancellor. So
sorry, our
give
chancellor.
her her title.
Yeah,
whether you
sorry.
think
I was
she
trying to think
deserves
of
it or
her. I
not.
was trying to think of her title. She's just so useless. I forgot.
Chancellor of the
Chancellor.
Exchequer. So
She's the chancellor. That she's screaming for growth, and you've got the smartest web company in Coinsilium. Let's be honest, I haven't even done the maths, but I reckon we're number 1 and 2 for highest growing stocks in the UK. So it's there for them to see. We don't have a leader like Donald Trump who will allow it. There is talks, obviously, with Farage, with Reform UK building up momentum. And he's just done a digital assets bill. So you can see where the UK is in relation to the US. And I think we are an election cycle behind. We are 4 years behind in this whole journey. And hopefully it will be quicker than that. But that's kind of the time frame that we're on.
And how do y'all think about the optionality that Bitcoin on the balance sheet provides into the future if the goal is to never sell the Bitcoin?
that's interesting because we in our treasury policy, to keep it in line with the regulations, we can't really say we're never going to sell our Bitcoin. Although whatever we think we're going to do with it, I think someone's going to have to tear it out of our cold dead hands.
Just to give more clarity, if you read the 8K filings of MicroStrategy and Michael Saylor, in those 8K filings it says they can sell their Bitcoins at any given time and all of that stuff. So it's...
Would you say the intention is to hold forever?
I don't. I mean, I never say forever because there's a long time. What I would say is that if at this stage, Coinsilium started out life and still is to a great degree an investor. So if you're an investor and you get offered the best possible investment there is, the only reason to sell it is if there's something else you need the cash for, or if a better investment comes along. So provided there's no need for the cash, and we will manage the company in such a way that hopefully we will not see a need for selling out of need for cash, then it comes to, if there's a better investment than Bitcoin. And if there is a better investment than Bitcoin that comes up in the future, then we'd have to consider it. But from where we're sitting, I can't see where or how that's going to happen. I mean, you've got to look at it as an investor. We've invested in startups. That's very high risk. You have a basket of them, and as much as you believe in one of them, you still have got the execution risk. You've got all the other risks that go with it, and you need the upside to actually be a multiple of what you're putting in to actually make it work. But with Coinsilium's approach to Bitcoin through Forza, buying Bitcoin, when you trust it and you believe in it, what's the risk? And it's going to go up. So, that's so I suppose, to sum it up, show me a better investment, and then we'll think about whether we sell our Bitcoin. But until such a time, it stays where it is.
What's interesting is, so Semler Scientific, for example, the second US publicly traded Bitcoin treasury company, he also obviously has Bitcoin as he'll never sell it. But his issue is his MNAV has actually gone below 1. So for him to do the ATM share sales isn't accretive for shareholders. So it's actually more beneficial for him, instead of to do that, is to buy up the stock. So how would he buy back the stock? Maybe he has to sell the Bitcoin in order to get cash, and then to get the stock higher, maybe he has other options to raise funds. But I think you're going to see every company have their own nuances because they're in their own market, their own jurisdiction with their own issues. And then you're obviously going to see, we're seeing Marathon, for example, that hold 50,000 Bitcoin. They started to lend out their Bitcoin, generating, I think, maybe 5 to 7%. So they don't have to sell their Bitcoin. So every company is going to try different things, and it's all about risk and reward. And we're no different.
You brought up Eric Semler. We're actually having him back on the podcast for his second appearance next week. So stay tuned for that, listeners. I'm curious, can one of you explain this newer metric, which I believe was introduced by Adam Back, which is called days to cover MNAV, and whether or not this is a metric that your team thinks is worth paying attention to? You would put it in your operational dashboard.
James could probably explain it better than I can, but what I would say is, for us, it's kind of difficult, given the regulatory kind of environment and landscape, for us to actually talk too much in those terms. I think we wouldn't want to stop investors looking at the value and using their metrics that they've developed and designed, and Adam Back has put out there, to actually decide whether we're investable or not based on the metrics that they've put out. But for us to talk about things in those terms puts us in a place where it kind of looks like we see ourselves as a proxy for Bitcoin, which is kind of not in line with the UK regulations. But they are very valid metrics, and I'm grateful that people are using them for us. But it's hard for us to put those out there coming from us. But James, you understand that, and I know you're a big advocate of those metrics as well.
Yeah, look, it's important to. So the days to cover MNAV it's essentially how long it takes a company its current Bitcoin stacking pace to accumulate enough Bitcoin to justify its market cap, based on its current multiple. It's based on its MNAV and its daily Bitcoin yield. So look, everything, as Malcolm said, from a regulation standpoint, like for me, I'm in this space every day, so I'm looking at the numbers, not just for Coinsilium, but all the other Bitcoin Treasury companies. So it's a valuable tool, and I think what we're seeing now is investors where they were maybe investing on the how much Bitcoin MicroStrategy has, 580,000 or whatever it is. It's now actually these metrics are trading tools. So like MetaPlanet have got X days to cover, and then another company has a much smaller days to cover. So there's that benchmarking trading tool that people are starting to use. I think if we take Bitcoin just as itself, it's a bubble, and there's only however many people, just us on Twitter screaming, and there's no one in. If you look at Google Trends, it's like bear market levels for Google searches on Bitcoin. So then you have Bitcoin Treasury companies, and then that's an even smaller vacuum. And then the Bitcoin metrics that we're looking at, like I think only probably say a couple of thousand investors are using these as trading tools. But yeah, as a big picture, they are very useful to start comparing against other companies as overvalued and undervalued. But yeah, from a regulation standpoint, it's not for the UK.
Okay, and maybe just spending another minute on days to cover MNAV, and we can speak in regards to strategies Bitcoin holdings, so that James, you can speak a little bit more freely. They're pushing 600,000 Bitcoin. You would imagine that that's almost a punitive metric to a company with such a significant stack, because it's, you know, the cost and the time to replace that stack in terms of an MNAV equivalent is a lot longer than what a MetaPlanet or a Smarter Web, for example, or yourselves might be looking at in terms of days to cover. So is it really that valuable of a metric if it kind of discounts the largest stack holder?
Yeah, it's hard. And then also for the smaller companies, it works in their favor. So what you're seeing is more and more companies doing it, and then like they get a greater multiple to themselves. So look, there's no right or wrong metric, and he's going off the Bitcoin yield metric on how much Bitcoin he can grow on a quarter or so basis. We are so early in this that I think there's going to be new metrics that are going to come out of this, and maybe it's better than to start taking market cap basis. So like we do the days to cover on market cap of X, and then we're doing it for these companies as well. But I think the most important thing is that you're trading at a premium to your Bitcoin holdings. And Saylor for 3 weeks now hasn't tapped his ATM, which I was shouting at, saying, please stop, because you are going to go into a 1x MNAV. And this is his thing, that he wanted all these companies, as many public companies, to adopt, and they are. But the issue is now that you should have a long-term time frame, but now everyone's got a very short-term time frame. Alt season in crypto has been completely cancelled. So now I think everyone's now running into these Bitcoin Treasury companies and trying to find the greatest yield and all this kind of leverage. So I would always back MicroStrategy. It's again, he's survived an entire bear market. He's just bought another 10,000 Bitcoin. He will continue to tap into the fixed income market. He's the only one that can really go with the convertible debt, even though he's kind of stopped at that. I think he needs Bitcoin at about 150,000 to then issue some more converts. So yeah, it's these metrics we're all learning, and I think the share prices don't even follow Bitcoin anymore. I think whatever jurisdiction you are in, I think that is the primary reason why your share price is going up or down, let alone the Bitcoin price.
A lot of the questions that I've been asking might sound skeptical, but we're truly just curious. So curious, what's to stop Strategy from spinning up an entity for the UK market? And if they were to do so, which Saylor has hinted in previous earnings calls, how might this affect your strategy?
Anyone could do it. If they know what they're doing, they'll be more successful. If they don't know what they're doing, they won't be. There's no kind of, the moat that we've got is down to our experience and presence in the UK market. You've actually got to look at it as, is it going to be a big enough market to attract him? Firstly, I mean, you know, the wonderful thing about this space is that there's no shortage of creativity. And you've just got to consider, as I do, you've got an amount of Bitcoin. It is a race to get as much as you can. You're home with the Bitcoin that you've got, provided it performs as it should do. And there's only going to be a limited amount. So wherever you're operating in the world, you're still playing with the same Bitcoin. You don't have to get it from the UK. You can get it from the US, and then that means there's less around in the UK. So I don't know if you would need to set up here. You just have to suck the oxygen of Bitcoin out of the UK, which once we're in a bit of a plateau until we sort of break meaningfully through, I'd say 110,000. James got a better feel of this. I still think there's a lot of liquidation going on. Probably people who are just haven't got the patience, or people who've just been sitting on it for ages, and there's still this churn. But ultimately, when everyone's shouting about you got to buy, whilst the supply is out there and it's being fed, you're fine. But once that dries up, the price moves up. And I don't think you need to be anywhere particularly in the world to actually, as long as the jurisdiction you're in is conducive for you actually to be able to hold your Bitcoin and make the most of it, then it's fine. We just happen to understand the UK market. So that's really it.
And sitting in with the 300 trillion gorilla that is the US fixed income market, and he has the however big the US equity market is. Like, there is no, like, look, he can come here, great, and it will help raise the awareness, but like there is no way he's even considering it because it's so small. The regulations aren't there, the instruments aren't there, the liquidity isn't there. He's got you don't leave the US, you go to the US, and it would be there's no rationale.
If anything, we're kind of taking some of that prospective money off of the US table because of our cross trading facility on OTC. So US investors can buy Coinsilium shares. The last time I looked today, I think our share price was up in the US, and there was quite a meaningful amount of trading there. So, this is all money that could be going into US Treasury companies. And yeah, we're up over 100% today in the US, over 6.7 million shares traded there. So, I think, this is the wonderful thing about connectivity in the markets. So yeah, I think that's sort of kind of our position on that. I mean, it'll be fascinating if he were to come here, but we're tiny.
Overall, it seems like differentiation is a big piece of the conversation when it comes to these public Bitcoin equities. And Malcolm, I heard you mention on your podcast with Tim Kotzman that you see leaning into this kind of idea of institutional grade custody as a point of differentiation for you all, and something that you think regulators and perhaps institutional investors aren't yet asking for enough out of these companies. But that you do expect to kind of start to demand this out of the Bitcoin treasury companies. So can you speak to maybe how you think about your current approach to the 25 plus Bitcoin in custody today?
So I want to be clear that we're not talking about custodying other people's Bitcoin. We're talking about our own custody arrangements, and we want to make sure that those custody arrangements are robust. Now we're just kind of at the beginning of the journey here, but we know enough over the years from actually having cryptocurrencies, digital asset stable coins, of what the good ways of custodying them are and what the bad ways are, and also how you transit those from cold storage to warm to exchange to trading. So you make sure that you're following best practices there. I think from any point of view, if you compare it to someone who's even storing gold, which is a more physical, it has a physical presence, but you are clear that if you're a gold, I don't know whether there was any such thing as a gold treasury company, but whatever you were doing with gold, you would want to make sure that that is safe, secure, and all the procedures and processes are in place to ensure that you've got the process so to ensure that you're not going to lose that gold or in our state in that Bitcoin. So we have certain metrics, and we're going to be even improving on them as we diversify. At the moment, we're using one particular custodian who's also an OTC desk in Gibraltar. They're regulated. Our trades are executed through a very clear protocol, which I won't go into too much detail on, but we haven't, that's another vulnerability when you're interacting with whoever's buying your Bitcoin for you. You have to make sure that that's a secure route, and also that our Bitcoin is stored in a discrete wallet. There's no rehypothecation. There's no commingling at any stage until you get to the point where you can't avoid it, which is when it's on the when it's being traded. But you want to make sure you avoid commingling with other funds as well. And it's all to do with provenance. I come from a background, as James alluded to, as a gold investor. And when I looked at a lot of ETF products for trading gold, I noticed that some of them were actually rehypothecating the gold. They were actually, there was more gold, there was less gold available than they were purporting. And that's what happens with the London bullion market. So there's people who lease the gold out. And we don't want to get into any of those situations from the outset. I think at this stage, people aren't really focusing on that. They don't care. But at some point in time, as this market grows, before regulation catches up, there might be people who purport to have a certain amount of Bitcoin, and maybe some of that Bitcoin is loaned out to someone without anyone knowing. So we don't want to get caught in that situation. So our Bitcoin policy is evolving and developing so that we can actually be sure that that's a way we'll differentiate ourselves. And when we talk to institutional investors, we can talk in that language because that's a language they'll understand, or they do understand, because it relates directly to everything you're talking about with regard to governance.
So last question here, and then we'll go ahead and get it wrapped up. It's been a great conversation, guys. Again, thanks for joining. But outside of the work y'all are doing in the space, what else about Bitcoin treasuries or leveraged Bitcoin equities has surprised you or has you paying close attention in recent weeks?
I would say the UK demand. There's £1 trillion sitting in SIPs and ISAs. The SIPs, I don't know what it stands for, but these are just like pension accounts. I can search it, but
self-investing pension plans, I think, something like that.
Yeah, self-invested personal pension plans. Yeah. So there's £1 trillion sitting in there. These ISAs as well, where retail investors can invest in, and there's just been, as you alluded to with MicroStrategy, that maybe they have plateaued or the metrics aren't in their favor. And the UK is very similar to Japan, that both jurisdictions have no ETFs. All right, they're at 0 or less than 1% interest rates. We're at 4, but there's no growth. Real estate in the UK is officially topped, in my opinion, and it's down 20%. Bonds are negative yielding. Equities have gone nowhere. And there are mandates within the UK, within investment funds, hedge funds, asset managers that have to invest in UK funds. Our Chancellor, Rachel Reeves, is making sure that money that's coming in is invested into UK startups or UK companies. So the demand is mad.
Maybe one last question, sorry, that you had me thinking about here. We talked about Metaplanet earlier, and it seems like they've done a really great job of branding and storytelling and creating visuals that attract the retail audience. But from the conversations I've heard you all having and this one today, it seems like perhaps you all are more focused on the institutional investor. I guess, how do you think about balancing trying to kind of have that retail exposure and all of that excitement versus speaking directly to more institutional investors? And are you trying to do both at the same time?
Yeah, you can't just go to institutions without addressing the retail investors, because ultimately the retail investors, and this is a kind of mantra for me, this industry, this kind of space wouldn't be anywhere without retail investor interest in the UK. It's driven it. That's, if you ask me what surprised me, it's the amount of people, the knowledge that these people have, the clear understanding of how Bitcoin works, which is something that has astounded me, because for years in this space, we kind of didn't even imagine that retail investors would even be attracted to it. It was just geeks when we started, and you had to have a high level of technical kind of proficiency to use a wallet, to understand how to avoid being hacked. And so once you've got that technical proficiency, it sort of goes hand in hand with you understanding the how Bitcoin works and the structure of it, and also the scarcity and its store of value. So there's a very limited audience, and what we've seen now is with the retail attraction, which is insatiable, the demand for what we're doing, that you can't ignore. We can't just go and talk to institutional investors and say that retail doesn't matter, because ultimately it's, the unique thing about Bitcoin is it wasn't launched by a big multinational corporation onto the world. It was a grassroots thing. And as a grassroots thing, the institutions were by definition late into the game. It's all the people who've built this from the ground up, who've created value, created wealth, and now it's not, people can see it's not going away. The institutions have to be interested in it. So we're trying to sort of get them to actually to get them to the tipping point where they understand it's, well, firstly, they know it's not going away. They know now. That's probably the first realization. The next realization comes from the attraction and the interest from the retail market. And then they say, well, we can't avoid it. We can't ignore it. Which is the best in class? And that's where we want to position ourselves.
And I do have to say as well that obviously Coinsilium have been going for 10 years, so they've already built up a very, very strong retail base. Like, I'm seeing a Telegram group with hundreds and hundreds of members, and same with the Twitter group that was set up as well. And so many great analysis and conversations are going on there. So yeah, it's great to see. And even today, Malcolm and Eddie did a Twitter Spaces. I think this is our 4th Twitter Spaces, and we only started Forza 4 weeks ago. So I think someone said in small cap world, it's unheard of for the CEO and board members to be engaging with shareholders, having weekly updates, making sure shareholders are involved and understanding the process. So something that they don't have to do, but to improve the transparency and the relationship with retail, it's something they want to do because it's a journey that we're all in it together.
All right, gentlemen, it's been a pleasure to learn more about what y'all are working on and Bitcoin adoption in the UK. So before we go, would love to give you the opportunity to plug your socials, whatever you'd like to plug. Where can the people find you?
Okay, so we've got well, Coinsilium is on Twitter is Coinsilium Group, on X, and if we also have a Forza Bitcoin at Forza Bitcoin X account, which is going to start becoming more active. Our Forza website is in development. Our Coinsilium website is www.coinsilium.com, but that talks more about our kind of legacy business, less about the Treasury, and that's undergoing legal review at the moment. Hopefully that will be ready. I keep saying the end of the week, and I really do hope it's the end of this week, because I don't think I can take it any longer. We've got everything, the designs that I love the new design. It's very simple, but we've got to get all those things in place. So that's really where you get hold of us. And James,
on Twitter at BTCJVS, and then all my articles are on CoinDesk.
Thank you so much, guys. Thank you both.
Thank you.
Thank you.
Thanks for listening to this week's episode of the show. Quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit acropolistreasury.com to learn more or to get in touch with our team.